We're in conversation with Amitabh Chaudhry, the CEO and MD of Axis Bank. So thank you very much for talking to Moneycontrol. It's great to catch up with you at Davos. What's top of mind this year at Davos? You know, every second person I speak to talks about the US and Trump and the second presidency. What are you picking up in your chats?
Obviously, Trump presidency is going to bring in hopefully a lot of change, if not a lot of change, at least a lot of volatility in the global macroeconomy and obviously geopolitics. He has already been talking about a lot of changes, 100 executive orders, tariffs, immigration and so on and so forth. So in my mind, obviously, it will be top of the mind of everyone. AI remains a topic which obviously continues to interest people to a great extent. Things around cybersecurity, climate risk has been pushed back a little bit, but still remains as relevant as it was a couple of years back. So that's what I'm picking up. It's the first day. I've not met as many people to be able to pick up everything, but that's what you're going to face, the 4 or 5 themes you're picking up.
Right. Talking about India, how deep are the growth worries for India? The Q2 GDP fall to 5.4%, advanced estimates showing full year growth at 6.4%, and a few people I spoke to said that, the consumption slowdown is manifesting in various ways. What are you seeing on the ground?
So the macroeconomic environment does look a bit tougher than what it was when we started the financial year. As you rightly pointed out, GDP growth has obviously come off a little bit. Liquidity remains tight. Rupee has seen a sharp fall. You're also seeing credit growth slow down. You're seeing some asset risk build up on the retail side. But our belief and our economists' belief is that the capex is coming back slowly, gradually. October was a good month. November was a bit of a tapering because of the festive season, but we do believe that the number maybe will land up higher than this, and that should definitely provide a good tailwind for the next financial year. Let's see what happens in the budget. I think government is fully aware of the fact that the growth is tapering off, and it is important for them to kind of deliver this growth. We also cannot ignore that in election after election, a lot of freebies are being promised, and it is in a way constraining the budget of the state governments to spend money, and we should be cognizant of that. I mean, we have some elections coming up soon, and again, we are seeing that the parties are talking about more freebies. So obviously it constrains the budget of the state government to go and spend in capex for development. And my view is that if you really want the growth to come back, real estate will play an important role, and in that the state governments have a very important role to play to get the urban development going, and the whole system whereby urban development is keeping pace with the investments people expect in real estate also has to happen. We cannot ignore that. And it's not just about development in terms of infrastructure, but development in terms of laws, processes and stuff like that. So that's an important part we need to be cognizant of. Let's also not forget India remains a great story. We are an important destination, important investment destination. We represent a very important lever for China Plus One strategy. We have very good relationships with countries across the world. So, let's not ignore the other side of the macro also. And if you look at the powers who are looking at India macro, I think they know what is going on. So it's not they're going to sit back and let this continue to slip. They will obviously course correct, and I'm expecting the course correction to happen soon.
Right. In fact, you led me to my next question. In terms of the budget's priorities, should the government step up spending to support growth, even at the cost of fiscal prudence?
I think fiscal prudence is important. I'm quite sure that government will maintain their fiscal prudence. So they do. I will expect the budget deficit to be brought down to below 4.5% as promised by the finance minister earlier. But they can see they had also put a lot of conditions around, the contribution of central government to state government around what state governments need to do before central will give them the money. I'm sure they will look at some of those things and see how they can spur the state government to spend their share quickly, faster, so that growth can be supported. Let's also understand that this growth we have, 6.5, 7, whatever the number is, also means that there is more money in the hands of government to spend. It's not that money is shrinking. It is growing, but maybe at a slightly lesser pace. But I do expect the fiscal prudence to be maintained.
Right. In terms of interest rates, isn't the RBI MPC holding high interest rates for too long? Should MPC cut rates in February?
So, what is impeding growth is not the interest rate, right? So if you look at the inflation, which has been stubborn, and the inflation rate continues to remain higher than 4%, just over 5%. Core inflation numbers are looking better, but I don't know whether the interest rate cut will really, spur investment in a big way. It might be a signal, and an important signal. I think more needs to be done on supporting credit growth, more needs to be done on improving the liquidity in the system, and I think that will be more important. rather than just going and looking at an interest rate cut and hoping that things will pan out on their own. Now that's what our view is. Again, as I said, people know what they're doing and they know what steps to take. I think RBI has already taken the first step to start improving liquidity a little bit. They're talking about daily VRR auctions. So let's see how this pans out. I mean, they will do it slowly, gradually in the right way. Also, a signal has been given that they will not keep supporting rupee the way they've done in the past. So you've seen rupee slip a little bit more. So let's see how this pans out. Wait and watch.
Right. Is the RBI being over-restrictive in lending to infra, retail loans? Is the credit squeeze adding to the growth slowdown?
I don't think RBI has restricted infra, support on the infra side. It's the banks themselves who stepped back because I think they took a lot of risk earlier, and they obviously did suffer. So unless the structure is right, the promoters are right amount of money is put in, banks will not lend money to infra. But if the right promoters are there, we are lending to infra. It's not that is not happening. As far as RBI is concerned on the retail side is concerned, if you look at how it is playing out, I mean, you have to give credit to RBI that they could spot some of these risks building up. So obviously, you are seeing the, kind of some of the retail assets, especially on the unsecured side, seeing a pickup in terms of slippages. We have to be watchful whether this slips into or goes and permeates into the secured side, or does it permeate into the SME side of the business. So we have to be watchful, and that's what I think we said on our investor call. We are very confident and positive about the growth in India and what, as a bank, we can do. But at the same time, we have to be cognizant of some of the risks which are developing in the system and which are visible at this point in time. Yes, I think, I would say we need to be congratulating RBI for spotting some of these things and warning the institutions about the risks they're taking, and also taking some measures to curtail some of the lending which had been happening almost unrestricted on the unsecured side. So hopefully this will settle down soon. And once it settles down, I think banks will be back in the business, but in a more prudent way than they have been before.
Right. After the latest quarterly results, Axis Bank mentioned that 90% of the slippages happened in the retail sector. You have a large number of fintech partnerships, co-lending arrangements. What's the impact of these slippages on these partnerships?
No, so I think, obviously when we went into these partnerships, we went with our eyes and ears open. When you go and underwrite a different kind of how you underwrite based on data, which is different from what you used to in the past, you obviously watch the data very, very closely and keep course correcting as you go along. So the experience is that, yes, it represents a definite future channel through which customers can be tapped into, and we have to keep refining our models and keep ensuring that underwriting standards are good enough that we can lend to this sector or these set of customers without taking more risk than what we are willing to do. So in that process, yes, there would be cases where you experience slippages which are higher than you expected, and you keep refining your model, because only then you learn. I mean, India was not doing unsecured lending long time back. It learned over a period of time and started doing it very, very well. I mean, till before this crisis happened. So I think in the same way, in this channel also, we are learning, and I think the faster we learn, the better off we will be. And that's why more and more partnerships will tend to work with you, because you understand that market, you understand them, and you understand the customer which is using these fintechs to take loans from banking system.
Right. Do you think it's possible for banks to replicate the distribution muscle and reach that fintechs have today? What role do you envisage for fintechs in the next few years, considering the reach and relationship they have with consumers?
See, fintechs do have capital to spend to acquire customers, right? Banks do not have the luxury that we can spend our capital and take large losses and tap into these customers. But by the way, fintech is just one part of the journey. We have our own fintech platforms. We have our own physical distribution. We are also not just sitting around and allowing fintechs to capture this space completely. So our view is, by the way, you might, just from the UPI perspective, the backbone of UPI, we have more than 30% market share as a bank. So it's not that we are not getting other kinds of data, but as you ingest this data, as you are able to underwrite it better, we will obviously continue to explore ways and means of reaching these customers directly or through some other channels. We are not saying that is the only way, but that is one of the ways, and we don't want to leave it for someone else to go and capture.
Right. Final question, sir. There's a lot of mention around AI. How far has Axis come in usage of AI? How do you personally use AI every day?
So we have been investing in exploring AI for the last 18 to 24 months. We have actually come out with internal solutions which are being used by a large set of our population to, and this is all based on some of the latest models which are available. We have partnered extensively with Microsoft on this, and I think Microsoft sees us as one of the players who is kind of ahead of the other competitors of ours in terms of using AI. But AI is expensive. It does cost a lot of money, so you have to, while keep investing in looking at how we can use in the future. We have about 10 to 15 pilots going on. We also have to be prudent about where we can get the maximum bang for the buck, and also wait for some of these expensive tools to come down in price so that they become more remunerative for us and more useful for us. So it's a journey we are on. I think obviously there is a clear, valid business case at a price point, and we are waiting in some cases for the price point to be reached. In some cases we are experimenting because we have no choice. We can't wait for it to fructify and others to get ahead before we say, okay, let's now dive into AI. It'll be too late by then.
Great. On that note, thank you very much for talking to us, sir.
Thank you.
you.